Och-Ziff, one of the world's largest hedge funds, is announcing a name change as part of a rebranding effort following some scandals and management turmoil. Leslie Picker joins us now with an exclusive interview. Leslie.
Hey, Mike. Thank you so much. And Rob Shafir, the CEO of Sculptor, thank you for joining us. Och-Ziff is the name of the fund that paid $400 million to settle bribery charges with the DOJ and SEC. Och-Ziff, that's the name of the firm that recently underwent some high-profile internal management struggles, to which you ultimately became CEO about a year and a half ago. Now today, the name changed to Sculptor. Why the name change? Is it to kind of put the past behind you?
Well, I think it's really the final touch on a series of changes and events that have happened to this firm, Leslie. And I think to understand that, as you say, you have to have some perspective on the firm. The firm was founded 25 years ago by Dan Och, who was really one of the real icons of the alternative asset management business. And he built a tremendously successful firm, and a firm that's really been known to have great, and consistent investment performance throughout its history, which is something that we're proud of to this day. But as you say, the firm went through a difficult period. We had a regulatory issue in 2014, which we settled with the government in 2016. And I think events like that can destroy firms, or firms can learn from those things and have the humility and the wherewithal to change. And I think we've made material changes to our firm. We have, I believe, a first-rate risk and compliance infrastructure today. And we've evolved, and when you think about Dan's retirement in 2018, transition from a founder is always a tricky thing to do. And the good news for us really was that we had a really deep bench of talent in this organization. And I think the real secret sauce is the fact that these people have all grown up here. And if you look at the people who are running the firm today, they've had 10 to 20 years of working together in this firm. They know the culture. They understand the risk process here. So I think that's been fairly seamless. But when you put it all together and you put the things behind us that we needed to put behind us and really have the new set of leaders in the seats, we felt that to mark the moment, it made sense to change our name.
So Daniel Och is not involved at all anymore with
Dan
Sculptor.
is no longer involved in, in the management of the firm. Dan is still a major shareholder of the firm, but he's no longer involved in the management of the firm.
So there are a lot of hedge funds these days that really wouldn't have been able to successfully pivot from the founder, from the figurehead of the firm. But since you've been in, the tide has actually shifted. You've been able to really stem the outflows. Performance is much better than a lot of your peers, and it seems like the business is really turning around. What do you think is the key to succession in the hedge fund industry, especially as others convert to family offices or just shut down altogether?
Well, I think our performance has been consistent, throughout our history, and I think we continue to evolve our process. But I think the key for us has really been, number one, to have those people who, as I said, grew up in this organization and work together and preserve that continuity. And the second piece is really just focusing the organization. So when we think about what we are, the simple question I asked when I got here is, okay, what are we good at? Where can we really demonstrate that we can drive alpha and generate returns for our shareholders? And that was in three major areas. It's been in the multi-strat business, it's been in the credit business, and it's been in the real estate business. And I think a lot of alternative asset management firms, or just asset management firms in general, have a tendency to just be asset gatherers. And they tend to try to just basically get as much assets as they can. We would rather be a bit more disciplined about that and stick to our knitting and stick to the areas that we actually believe we have demonstrated, the ability to drive performance, and believe we can continue to do so.
Och-Ziff, now Sculptor, is a rarity in the hedge fund industry in that it's publicly traded. Do you think that a lot of that discipline and change was driven by the fact that you are publicly traded and it was kind of a necessity? You didn't really have the option to close your doors?
No, I don't know that I would say that. I'd say, look, we are a public company, and we are very focused on driving shareholder value. And I think to do that, it's really going to be about executing the plan. So no one here is declaring victory. I think we have a clear strategy. I have a lot of confidence in the people who are leading the organization today. And if we can do what I believe we're capable of doing, that is going to drive investment performance. That investment performance is going to drive growth in our platform, and I think over time that will certainly manifest itself in the share price.
Speaking of growth within your underlying strategies, I was surprised in my research to learn that credit is actually 2/3 of your assets under management these days. Multi-strat, about 1/3 of your assets under management these days. How durable is credit in this current environment, and why do you think it is that multi-strat is shrinking relative to your overall AUM?
Well, I mean, first of all, we have very successfully grown a great credit platform, and I think, with our CEO, Jimmy Levin, and the team underneath him, we have real capability both in performing credit as well as non-performing credit. We also express, credit within our real estate platform as well as within the multi-strat itself. I think in terms of the multi-strat, I guess what I would say is, if you really think about the environment in the last 10 years, we've been in an environment where you've had low volatility, low rates, and massively inflating asset prices. And that has really behooved investors to be in, pure risk-on strategies. Anything from passive to private equity to private credit. If you have been long this market, you have made a lot of money. And the notion of a hedge fund that actually hedges out risk, as a multi-strat would do, has by definition generally on an absolute basis underperformed those strategies. But the real question that I would ask investors, and I do ask investors, is, okay, that was the last 10 years, what about the next 5? And not that anybody has a crystal ball, I certainly don't, but when I think about that, I think if there is more volatility and there's less of a one-directional market, the idea of something like a multi-strat that actually preserves capital on the downside and participates on the upside, I think is a very sensible place to have money. And for us, we've got global scale, we've got capability across these asset classes. So, I like our chances.
All right. Rob Shafir, CEO of Sculptor, formerly known as Och-Ziff, thank you so much for joining us today.